And our own perceptions can become our investment biases as well, where, I don't like crypto, therefore it's a bubble, or I don't like US equities because they're very expensive now, they're a bubble. But mostly these things are shades of grey, and many reflexive trends, which many identify as bubbles, can go on for a lot longer than many of us imagine, or maybe we're at secular shifts. Those things happen too. I mean, we've got to make sense of all of this. And we did talk about this in the past in one of the 2-week campaigns about Has Everything Changed? But really, what's happened since then is many more things have gone to extremes. So maybe valuations change again on demographics. But we've also talked about what happens to the pensions industry when those baby boomers come out. Where do the asset prices clear between boomers and millennials? We're seeing it with housing now, as more people start participating in the housing market again. So these are things that, often they take us by surprise. So the first reaction is to call it a bubble. And again, I don't really know. I do see risk, as I said before. I see a lot of risk in the US market because even if it's not a bubble, the speculative activity is just monstrous. When mutual funds have no cash, the lowest cash they've ever had in history, tells me there's no buffers in the market. Could that just create more volatility? Is the long volatility bet a bubble? Because there's a lot of people in that. Again, these things are interesting me. Crypto, we're looking at that, and many of you have seen by now that I've been using stuff like Metcalfe's law to try and get an understanding of that, because again, with stocks like Amazon and Facebook, everybody said they were bubble stocks until they realized that it was all about network adoption effects. And everyone was like, oh God, we didn't value this correctly. Maybe that's right with crypto. That's my personal view. And maybe that's right with the stock market overall. Could it be that there's a Metcalfe's law effect as this new generation comes into the market? And real estate, what does that all mean? Real estate's gone kind of batshit crazy in this environment. And that, to me, is something that is interesting. What happens if interest rates go up? Can all of these people suddenly afford this? I don't know. It's not clear. So these things are really of concern, but they're also a ponderance, because I don't want to miss the signal from the noise by using my old biases. And also, there are certain things that are definitely not a bubble. And we've talked about this, or I've talked about this in the past, which is stuff like emerging markets. They've underperformed developed markets for about 15 years now. It's one of the longest divergences in history and one of the largest. So our developed markets, the bubble, and the baby boomer generation coming out, pop it over time. It doesn't have to be a sharp fall. We've seen it in things like oil companies that over time, people just want to own less of them. And so over time, they just underperform. There is a narrative about modern monetary theory that it's going to create inflation and the world's going to blow up. I don't know. We've not done this before, but I'm not sure the answers are ever going to be black and white. And so that makes it even more important for all of us to kind of sit down and try and pick apart all of the narratives and work out what works best for us. What are the risks? Because really bubbles are about, can I invest in them and make money? Is crypto in the middle of a bubble? Will it go up much further? My view is probably and yes. But the other thing is where do I have risk that I shouldn't have? And for me, it's the US equity market. My big bet was the crypto bet. And the crypto bet, I said, it is the asset that's going to be the super black hole that sucks in all other asset performances. And to this day, it's true. Ethereum was another bet of mine. And, at time of recording this, Bitcoin's up 30% on the year. Ethereum's up 120% on the year. And we've only just started February. I mean, it's extraordinary. There's no other asset, nothing, no commodity, nothing that has come close to any of this. So, that narrative as it builds creates that reflective narrative. So what it is in this is finding out where we can make the best bets in a slightly risky, unclear world. The bubble of central banking is the narrative that almost all of us share. We can see it dwarfing most other macro factors these days. It makes it really difficult for those of us in macro to even use economic variables any longer. And we need to think through those kind of things that are all part of this equation of understanding this framework. People like Lacey Hunt's super useful to really find out how this all interconnects, and to try and get a combination of views within all of this too. We don't want just the one view. Central bank printing is bad. Well, it's bad from some perspectives and good from others. It's been good for the housing market. So if you're in real estate, it's been great for you. It's been good for your 401k portfolio, but it's been bad for your savings in cash and other things. So it is a level of complexity that most people don't really know how to deal with, and nor do I, to be honest. And that's why for me, to do something like this, to get these kind of people together, really helped me. The bomb bust in '94 was the first major event that I saw, and that was also the Mexican crisis around that time, where the emerging market bubble first popped. The next bubble that I dealt with was the 1998 and 97 Asian crisis that morphed into the long-term capital crisis. And that was a huge bubble burst as excess capital had been allocated to countries that couldn't really afford to pay, and they had these peg currencies to the dollar. And that was a massive deflationary wave that occurred roughly when China entered the WTO as well. And the bubble of globalization happened that seems to be unwinding now in front of our eyes. The next bubble that came straight out of that, because again, the Federal Reserve jacked up everything into that and drew the line and said, we can't have assets falling and we can't have too big to fail falling either. So we're going to prop it up. That led to a kind of green flag to say, go for it, the equity market. And what we saw was an enormous speculative bubble that came out of the tech stocks particularly, but equities overall. And that also had a backdrop against the start of the indexation bubble, as most of the big pension funds and asset allocators were able to use futures in their asset allocations to passive funds, and there was a lot of passive fund vehicles. So that created that. The next bubble that I was part of was then the commodity bubble and the China bubble, which happened over the early phase of the 2000s. Everybody's eyes went to, where's the next big opportunity? It's China. China exploded. Anybody who sold anything to China exploded. Copper, oil, anything, because there was a marginal new buyer of some magnitude. And in the end, I was writing pieces about the fact that the China miracle was driven on debt and that there was going to be a payback. And we've seen that within the Chinese economy and the performance of Chinese assets over time. They've not done as well as they were back then. And, it remains to be seen whether the end of that financial bubble gets popped or whether it's a slow workout, Japan style, even though the Japan equity bubble fell, but then the economic bubble and the debt bubble has been trying to be worked out over time. The bubble that came straight out of the China situation also was a domestic bubble in most economies, and that was property, because people thought, well, interest rates are low forever, we can start buying property, so leverage. And leverage has been a feature of almost every bubble in history. And so we've seen, we saw record leverage in the property market, and that bubble burst too, when the debt markets couldn't stand up with all of the debt that was there, and then we had to pick apart the carcass of the financial system. The next part of the bubble, well, I don't know, but social media has been a big part of it. The size of Facebook and Google and Amazon and all of those new tech stocks have seen truly extraordinary returns. Are they the bubble? It's not clear. Is it the passive bubble? That possibly. Some people say the bond market's a bubble, and I don't think of that because I don't see speculative activity in the bond market. All I saw is everybody fighting me every time I say I'm bullish bonds, and I have been for 30 years. Everyone calls me an idiot and can't you see inflation's coming, and it never comes.